Okay, and welcome back, students who are taking financial accounting. In this series of videos, we are working on the assigned homework problems from the digital study guide for Chapter 9. They're the exercises, Group B exercises. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. And just as a quick aside, this is especially true if you don't understand the underlying concepts for bonds. Okay, you need to go back and study the material, watch the videos again, right, in order to be able to do the problems, right? All right, so going forward here, let me get my pen. Okay. All right, sales tax payable. Make journal entries to record the following transactions. Explanations are not required, right? So on May 31st, recorded cash sales for $630,000 for the month. So cash sales, right, for the month, plus sales tax of 7% collected, and ignore the cost of goods sold. And then on June 6th, sent the May sales tax to the state. Okay, so this is, this chapter is, on liabilities. So I guess, it seems relatively simple here. If I have $630,000 in cash sales at 7%, okay, that is going to be $44,100 in sales tax, okay, and 630,000 plus the 44,100 in sales tax means we collected $674,100 in cash. So on May 31st, am I affecting cash? Yes. I'm receiving cash. I'm getting $674,000 in cash, so I debit my cash for $674,100. Debits have to equal credits, so I'm going to credit. Well, what am I crediting? Cash sales, so I'm recording revenue, right? So I have sales. Actually, I should just move it over. Credit sales revenue for $630,000, and also credit sales tax payable for the $44,100. So my debits equal my credits. That's that journal entry. Now on 6/6, I'm sending the May sales tax to the state. So am I affecting cash? Yes, my cash is going out, so I'm going to credit my cash for the amount of 44,100, and I am going to debit. This is what I owe right here, right? So I'm going to debit my sales tax payable for the $44,100. Easy. All right. If you didn't understand that, then you need to really, really go back to the very beginning to understand, one, how to calculate your tax, and two, how to work with sales tax payable. It was covered back in Math for Business and Finance, and earlier in the textbook when you were doing the graded project. Okay. All right. 28. Accounting for note payable. Record the following note payable transactions of Conway Corp in the company's journal. Explanations are not required. Okay, so on February 1st, 2014, purchased equipment costing $55,000 by issuing a 1-year 6% note payable. Okay, so that's how they're buying the equipment. And then on December 31st, we have to accrue the interest on the note payable because this is 1 year. If we draw a timeline, we're buying this on 2/1, okay? So that means the note is due on 2/1 of the following year. But December 31st occurs right here, so we have to accrue the interest at that particular date and time. We have to make that adjusting entry at the end of the year. Theoretically, you should be making those adjusting entries, at the end of each accounting period. Okay, but if your accounting period is the entire year, well, then that's why you're making it on December 31st. Right? So you have to make that adjusting entry on December 31st, and then on February 1st, 2015, pay the note payable at maturity. Okay, so let's go about making these journal entries. So I have 2/1/2014. I'm purchasing equipment costing $5,000 by issuing a 1-year 6% note payable. So am I affecting cash? No. Am I affecting accounts receivable or accounts payable? No. Remember, my asking those questions, just my thought process on how to make a journal entry when you don't know how. If you can't make this journal entry on your own and you're not sure about it, go back and watch the videos on how to make journal entries in the very first section, that was titled Introduction to Accounting and Bookkeeping. There's a couple of videos there that goes through my thought process on when I make journal entries. Okay, so that's why I asked, am I affecting cash? No. Am I affecting receivables and payables? No. So then the third question I'm asking is what do I know? Well, I know I'm purchasing equipment, and equipment is an asset. So my asset is increasing. So that means I'm going to debit equipment for the $55,000, and I am going to credit. I'm issuing a 1-year note payable, so I'm going to credit note payable for $55,000. Okay, that's that entry. So on December 31st, 2014, I have to accrue the interest on the note payable. Okay, so if it's a $55,000 note times 6%, and I'm looking at a total of 11 periods. Remember, so this is February 1st. And if obviously I didn't put in all the lines, but so I think I have the full month of February, because this is the first to get to February 28th, the full month right here, right? Remember, this is the end of the month. So I have all of February, all of March, April, May, June, July, August, September, October, all of November, and all of December. If you draw out the full timeline and you label it accordingly, you'll find that you've used up 11 months. And that kind of makes sense, because if this is, let me erase some of this here. Okay. If this here is 12/31, right? Well, then right next to it, the next day is 1/1, right? Well, 1/1 to 12/1 is 1 month. And that 1/1 to 2/1 is 1 month, right? So that means, from here to here, right? That has to be 11 months. Okay, so that's how I get 11 months over 12. And if I end up doing the math, I end up with $3,025. Okay, 55,000 times 0.06, decimal form of 6%, times 11. Hit the equal sign on your calculator, you get a big number, and then you divide by 12 and you get 3,025. So that's the interest that's accrued up to that point in time, right? So that is, that's going to be an expense to us, an interest expense. So I debit interest expense for the 3,025, and I credit. Now remember, it's, I'm accruing that interest. I'm just building it up. I haven't paid it out yet, right? Since I haven't paid it out and I and that's a liability to me, right? This is going to be interest payable for 3,025. Okay. Now, then you're going to see how that, this interest payable comes into play, because now on 2/1/15 we have to pay the note payable at maturity, right? So I know that when I'm paying the note payable at maturity, I am going, I have to reverse the note payable right here, okay? So I'm going to debit my note payable for the 55,000, okay? So that makes that balance and that balance wash itself out, okay? I know that I have to take care of this here interest payable, which is on my books. That's a credit, so I have to debit my interest payable for the 3,025. Okay, so that washes each other out, right? The 3025 and that 3025. And I also know that I have interest that an interest expense that I've incurred for the month of January. So I have to calculate what that is. So I have 55,000 times the 6% times 1/12, and that's going to give me $275 in interest expense. So I'm going to debit my interest expense for $275. And then of course I'm going to credit my cash because I'm paying it out. And debits have to equal credits, so whatever they add up to, which ends up being 58,300, and that's how much in cash I'm going to pay out. Now, realize that, what did I do here as far as making this journal entry? Am I affecting cash? Yes, because I'm paying the note payable, but I'm not making that portion of the entry first because I don't know what it is. I have to actually calculate my interest before, I know what my note is. Okay, I know what my note payable is. Okay, but I don't know what the total amount of the interest is. I have to actually do, another interest calculation in order to be able to know what the total amount of my interest is. Okay, so that plus the 275 plus the 3,025 is my interest. The principal is the 55,000. So then I back into how much I need to pay for cash. All right, to pay the note payable at maturity. So even though when I'm making a journal entry, I ask myself, do I affect cash? Yes, but I can't answer that. I can't give it a number until I do everything else first. Okay, so that's it for that particular exercise. And with that, I'm going to stop here. And if you didn't understand something, again, go back and watch the theory videos. And if you still have any questions, feel free to contact an instructor.